In this video, I would like to talk about some price setting decisions, or what is influencing, or what you should think about when you are going to set the price for your products. And in the beginning, I would like to introduce you two basic approaches that we can undertake, and then there are going to be five main factors or five main categories of factors that are going to influence our decision. So let's start with the first basic approach, and it is going to be inside out pricing. And on the other hand, of course, logically, there is going to be outside-in pricing. So if you begin with inside out, imagine that your company is just some small thing or some small object in a large market. So you are going to go from inside of your small company out to the big market. And on the other hand, of course, in outside-in approach, you will go the opposite direction. So meanwhile, adopting inside-out pricing, you are going to be cost-based. So you will focus on your costs and you will try to reflect these costs on your product. So let's say I'm producing a car, so I will focus on which parts of my car cost how much, and I will reflect these to the final price of my product. It's quite simple. But there are some issues connected with this approach. The basic one is that you are not going to reflect all the costs because maybe once the car leaves your factory, there are going to be some additional costs, let's say for the transfer to the distributor, and that will mean that your product will get some more price. So there will be some price added and you will not count with it. And after all, you will find out that your products are more expensive than you have expected and that you are unable to sell them. And moreover, this inside-out pricing is not market-oriented, which means you are not really taking care about some your customers, how they are perceiving your product. Maybe they do not even value your product this high as you think about it. Okay, but if we move at the next extreme, you can imagine it as a bipolar line. So on the left side you have got inside out, and on the very other extreme you have got outside in. And in this case you are going to be really focused on the customer perception. So let's say your product has got some elements and you are trying to value them. So how much is my customer really willing to pay for this product? And you are also going to care about your competition. So in the market outside there is some competition and they have some prices. So I will try to set my price that will be maybe lower to them, adequate to them, or who knows. And now when we have described two basic approaches, we can move to five basic groups of issues that we are going to face. At the first, there is going to be our company. Of course, our company has some costs. We have talked about it a little bit. And these costs are definitely going to influence our decision, but moreover, there can be some corporate objectives or some plans that our company tries to achieve. Let's say they try to have more of a profits, so in a close future they can expand the production. Or there can be some product range and you have to adjust the price to other products in your range, in your portfolio. Well, but these are fairly simple. It becomes a little bit more tricky if we move to customers. Customers, it is very important to remember that our customers have some perception. So even though we think that our product is worth something and maybe it is great, our customers are definitely going to have different perceptions and we have to value these. And also they are going to have some ability to pay. So we have to think about the market itself. What is the average salary or how much they are willing to pay for similar products, for electronic products if you are in that industry. And this is thinly connected with our next factor, and that is called the context. Or one can call it also the environment. Here you have to think about all the general factors. Let's say there is an economy. Maybe there are also some legal regulations so that your product cannot be of a lower price. Let's say this is a good example in Sweden where alcohol over a certain level of alcohol has to be quite expensive so that people are no, are somehow limited with a price to buy a larger amount. So you have to think about these factors. And of course, there are going to be currency. Maybe you are trading internationally, so we have to think about the currency flows. Well, let's move to the other one, and that is channels. Channels. In a channels, you are definitely going to have some intermediaries. So if you haven't met this term intermediaries, let's say you are a producer and you are making, you are really the one who has got a product line and who is making some product. It will very rarely occur that you will be able to sell your product directly. Maybe you will have some distributors or some intermediaries who will be between you and your customer. All of these intermediaries or all these persons would like to make a profit because they are transferring your product. So you have to think about them, and you should be willing to actually give them some money or leave some share of the price for them. And secondly, there is going to be some capabilities of them. Maybe they are not able to sell your product at this exact price. Maybe you have to sell it lower. Well, and we can move to the last one, which is going to be the competitors. Competitors are going to have some offerings. They have got competing products. And of course, they are going to have some pricings and some costs. So you have to look at them as well. What is the price that they are offering? What are the costs that they are incurring? And of course, what is their competitive structure? But this point is a little bit tricky, at least from my point of view. And in recent years, it shows that you in some sense do not care that much about the concurrencing prices as you used to, because there is one saying that has occurred, and that is your competitors are not going to pay your electricity bills. And now, okay, so these were the two basic approaches we can adopt and the five basic groups of factors that we should think about when we are going to set our price.